What if the next phase of global finance isn't backed by gold bars sitting inside vaults, but by digital liquidity moving across blockchain networks in seconds? That might sound like a bold statement, but right now a growing discussion is emerging around tokenized assets, digital reserve systems, and the role XRP could potentially play in a future financial infrastructure that looks very different from the one we know today. And here's the interesting part. This conversation isn't really about replacing gold, it's about making gold more useful. Because for centuries, nations have stored massive amounts of wealth in physical reserves. Gold has been the foundation of trust, stability, and monetary confidence. But while gold is incredibly valuable, it's also incredibly slow. You can't instantly move billions of dollars worth of gold across borders. You can't efficiently rebalance reserves in real time. And you certainly can't settle international transactions within seconds using physical bars locked inside a vault. That's where digital infrastructure enters the conversation. And according to a growing number of analysts, tokenization could become one of the biggest transformations in modern finance. Welcome back to XRP Update. Today we're breaking down why some analysts believe tokenized reserve assets, XRP liquidity pools, and institutional blockchain infrastructure could eventually reshape how value moves around the world. Now, before we go any further, let's make one thing clear. There has been a lot of speculation recently surrounding central banks, tokenized assets, and XRP. What we're discussing today is not a confirmation that central banks are actively moving all of their gold reserves into XRP liquidity pools right now. Instead, we're examining why this conversation is gaining attention and why many believe the underlying technology could become increasingly important in the years ahead. And honestly, when you start connecting the dots, the bigger picture becomes very interesting. One of the biggest drivers behind this discussion is the continued growth of tokenization. Over the last few years, financial institutions have become increasingly interested in bringing traditional assets onto blockchain networks. We're talking about bonds, we're talking about real estate, we're talking about commodities, and yes, even precious metals. The idea is simple. Instead of keeping assets trapped inside traditional systems, those assets can be represented digitally and moved with much greater efficiency. And if that happens at scale, the implications become enormous. Because suddenly you're no longer dealing with a system that takes days to settle transactions. You're dealing with infrastructure that can move value nearly instantly. Now think about why this matters for central banks and sovereign institutions. These organizations manage enormous amounts of capital. Every efficiency gain matters. Every reduction in settlement time matters. Every improvement in liquidity matters. And that's one reason why discussions around blockchain infrastructure continue growing. At the same time, regulatory frameworks are beginning to mature. Around the world, governments and regulators are working toward clearer rules for digital assets. And while the process hasn't been perfect, the overall trend is moving toward greater institutional participation. Why is that important? Because institutions don't allocate significant capital into uncertainty. They need compliance. They need transparency. They need rules. And once those rules become clearer, adoption tends to accelerate. This is one reason many XRP supporters continue paying close attention to developments surrounding regulatory clarity. Because infrastructure becomes far more valuable when large institutions are comfortable using it. But here's where the XRP Ledger enters the picture. The XRP Ledger was designed with speed, efficiency, and value transfer in mind. For years, supporters have argued that its real strength isn't speculation, it's utility. It's the ability to move liquidity efficiently across different assets in different markets. And as tokenized assets continue growing, that conversation becomes increasingly relevant. Because tokenization alone isn't enough. Assets need liquidity. Assets need trading pairs. Assets need mechanisms that allow value to move efficiently between participants. And that's exactly why liquidity pools have become such an important topic across blockchain ecosystems. Now imagine a future where tokenized commodities, tokenized reserves, tokenized currencies, and tokenized financial products all exist on interconnected networks. The real challenge isn't creating the assets, the challenge is connecting them. And that's where liquidity becomes critical. This is why many analysts believe the next major phase of blockchain adoption won't simply be about bringing assets on-chain. It will be about creating efficient systems that allow those assets to interact with each other. And that's where XRP frequently enters the conversation as a bridge asset. Because if multiple forms of value need to move between different participants, different institutions, and different markets, liquidity becomes one of the most valuable resources in the entire system. And this is where the discussion becomes much bigger than price. It's about infrastructure, it's about efficiency, and it's about how the financial system could evolve over the next decade. But that's only the beginning, because when we look at what's happening globally, especially among emerging economic alliances and institutions exploring digital asset infrastructure, another major trend starts becoming visible. And that trend could have significant implications for XRP's long-term role in global liquidity. Now here's where this discussion starts becoming even more important, Because if tokenized assets continue growing and more institutions begin experimenting with blockchain-based liquidity, the question isn't whether digital infrastructure will matter. The question becomes which networks are best positioned to support it. And that's why XRP keeps appearing in these conversations. Not because every central bank is suddenly buying XRP tomorrow, but because the XRP ledger was specifically designed to move value efficiently between different assets, different markets, and different participants. And when you think about the future of global finance, that's exactly where the challenge exists. The world isn't moving toward a system with fewer assets. It's moving toward a system with more assets, more digital currencies, more tokenized commodities, more tokenized bonds, more tokenized real estate, more tokenized financial products. And as that ecosystem grows, liquidity becomes increasingly valuable because every asset needs a way to connect with every other asset. That's where liquidity pools enter the conversation. Instead of relying on slow, fragmented systems, liquidity pools create an environment where assets can move more efficiently between participants. And if institutions begin using blockchain networks for those activities, the demand for deep liquidity could become one of the most important factors in the entire ecosystem. This is one reason why some analysts believe the next phase of blockchain adoption won't be driven by speculation alone. It will be driven by utility, by actual financial activity, by real assets interacting with real liquidity. And that's a very different environment from what many people experienced during previous crypto cycles. Now, another interesting angle involves sovereign wealth and reserve management. Historically, central banks have focused on preserving value, but the modern financial system increasingly values both preservation and efficiency. Holding an asset is one thing. Being able to mobilize that asset quickly is another. That's why tokenization continues attracting attention. Not because institutions want to abandon traditional reserves overnight, but because they want more flexibility in how those reserves interact with the global economy. And if tokenized assets continue expanding, networks capable of supporting large-scale liquidity could become increasingly important. That's where many XRP supporters see opportunity. Not necessarily because of what happens tomorrow, but because of what the next 5 to 10 years could look like. Imagine a world where tokenized assets are commonplace, where value moves globally in seconds rather than days, where liquidity can be accessed instantly across multiple markets, and where blockchain infrastructure operates quietly in the background of everyday finance. If that future develops the way many analysts expect, the networks providing that infrastructure could become some of the most important pieces of the financial system. And that's why discussions around XRP, liquidity, and tokenization continue gaining momentum. Because whether you're looking at real estate, commodities, precious metals, or international payments, the same theme keeps appearing: efficiency, speed, liquidity, and interoperability. Now, does that automatically mean XRP becomes the center of everything? Of course not. The future is never guaranteed. Competition will remain intense, technology will continue evolving, and adoption will likely happen gradually rather than overnight. But what is becoming increasingly clear is that the conversation around XRP is evolving. It's no longer just about price targets. It's no longer just about speculation. It's increasingly about infrastructure and the role digital liquidity could play in the next generation of finance. And that's why so many investors are paying attention to these developments. Not because every prediction will come true, but because the direction of travel is becoming harder to ignore. The financial world is changing. Tokenization continues expanding, institutional interest continues growing, and the search for faster, more efficient liquidity solutions isn't slowing down. Whether XRP ultimately becomes one of the biggest beneficiaries remains to be seen. But one thing is certain: the conversation surrounding digital assets is becoming much bigger than crypto alone, and that's exactly why we'll continue watching these developments closely here on XRP Update. If you enjoyed today's discussion, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss our latest XRP coverage. Thank you for watching, and I'll see you in the next update.